I thought I'd do an update on oil. There's not been much in the way of new news about the oil price, but we are seeing quite a bit of volatility over recent weeks. Just as a quick recap, we're going to have a look at some of the charts. So over the last 12 months, we had the surge on the invasion of Ukraine by Russia. We've seen the market just selling off since then. We've seen volatility over the last few weeks, plenty of volatility here. And if we take the chart right back out, we can see the levels hit in recent weeks. We've got to go back to, December 2021 lows. So overall, quite a steep decline since last year, but no real direction in recent weeks, but lots of volatility. So I thought, let's take a look at it, because I do think there's perhaps a short-term trade in here. Before we get into it, a quick mention for my website. I do a newsletter that comes out every week. Normally over the weekend. It's free of charge. If you go to the website davidjonestrading.co.uk, you can sign up for the newsletter and get that. A box should appear on the homepage. Of course, I offer a trading course. It's been running for a few years now. You can find out more details and the different packages available on that. And also, you'll see me set a trade up during this video. You can find out more about the broker I use, why I use them. I recorded a short video on the website. Right, let's get into it. Talk about oil briefly and then have a look on the charts and get this trade set up. So we've seen the price has been sliding since June 2022, since last summer. We've recently hit the lowest levels since December 2021, down in the low 60s, around $64 a barrel. It has proved to be fairly good support. But the last couple of months, lots of volatility, some big swings day to day, week to week, but we're still sideways. So we've got no overall direction. I think, one of the things that's holding oil down at the moment are these ongoing concerns we have about the world economy and the fears of potentially a global recession, partly, of course, due to higher interest rates. We've seen plenty of central banks raise their interest rates. At the time of recording, the UK has raised their rates again. And again, the worry is, okay, that's to try and combat inflation, but what sort of impact will it have on the global economy? I think the fears of a recession are getting overplayed. So I wonder if that starts to change, will we see a lift for the oil price? And if you look at stock market indices, the Nasdaq's a good example. Just this week we've seen a fresh recovery high in the Nasdaq. So even though these fears are out there, like I say, I do think they may be getting a bit over-egged, and at the moment at least, stock markets don't seem too bothered by it. But it is something that is weighing on the price of crude oil. Anyway, let's take a look at the charts. We'll look at the more medium-term point of view, but we'll also look short-term, and I'll look to set a trade up on a pullback in the price of oil. Let's take a look. Let's take a look at oil in a bit more detail then. It's been a strange couple of months or so. We had that announcement from OPEC that came over the weekend, the first weekend in April, saying that they were going to reduce production. And we saw the price of oil jump quite sharply. It managed to push a bit higher. But since then, we've seen the price turn around. And we had this quite strange move. Let me show you on the short-term charts. Just in here on the 3rd of May, so Wednesday the 3rd of May, late at night, 11 o'clock at night UK time, where in 5 minutes the price goes from $68 to $63 and then recovers. So we had something of a flash crash in the oil price, which it did recover off very quickly. By 2 o'clock in the morning, it was back to where it was before all that happened. So what do we have now for oil? I think it's a hard market to call in the medium term. We've got this, we had this range from December through to the beginning of March. So we had this range for about 4 months where oil was banging around in a sideways range, couldn't really get through $82 a barrel, then sold off towards 64 by the 3rd week of March. We've seen it, bounce back since then, lots of volatility, but came back down to those lows just at the beginning of this month. So I think from a longer term trend point of view, we don't really have one. Looking at the recent range, it's been as low as 64, been as high as 83 and a bit. So we're pretty much halfway through that range with the price trading at $73. So I think if there is a trade there, it's a short-term trade, and that's one I'll set up. If we take a look at the RSI, went oversold back here, end of March, oversold again when it came back to those old lows at the beginning of May. So in the sideways range, the RSI has done an okay job at calling the tops and the bottoms from overbought, oversold. But I do think the trade is perhaps more of a short-term one. So from a medium-term point of view, if we saw weakness back below $70, it looks like a buying opportunity. Strength up above 80 looks like a selling opportunity. And that's it. But from a more short-term point of view, let's flick this over to an hourly chart. So it is a little bit distorted by what's gone on with that strange move. But I think if we picked up on from the highs in the middle of April even, and drew our trend line, something like that, I mean, that did a pretty good job of holding the market down all the way through the second half of April. Pretty much a textbook trend line. And we've seen it recently just start to break above that trend line. So if you thought some sort of recovery was on, what I'm going to do is pick up on, perhaps the lows from the beginning of the month. Let's zoom it in and see what the trade might be. So we did have the potential for a trend starting to fall, and it sort of formed, and it slipped out of it yesterday, this potential new trend. But, I do think we've still got pretty good support back at these old lows from earlier this week, from Tuesday of this week. The lows coming in around, $71.30. Then on Monday of this week, we've got the lows coming in around $71. So $71 has been okay support in the short term for the price of oil. So the trade I might want to do here, I might want to be a buyer of a dip on oil. It's been a pretty sideways couple of days. So what I'm going to do, I'm going to leave an order to buy if it dips back towards the Wednesday low, and then put a stop loss the other side of the Monday low. Let's set that trade up. So I'm on the trading platform now. To find out what trading platform I use, if you go to my website, davidjonestrading.co.uk, there is a page on there. If you click on broker, it'll take you to a page where I've recorded a short video just explaining why I use this broker. Then you can click through and go to the broker. On the website as well, you can find out details of my trading performance by clicking on the performance section there. You can see the performance when I was trading this account openly from November through to the end of January. So close profits of just under £2,200 following the principles that I outline on the trading course. So you can find more details about the broker and, of course, the content of the trading course by going to the website davidjonestrading.co.uk. But for now, let's get this order in for oil. So what I want to do, I want to be a buyer if it slips back towards yesterday's low. Let's call it $72 with a stop the other side of Monday low. Monday lows were 71. Let's say I'm going to go $70 for a stop. Let's set the trade up. So let's set this order up for crude oil. So the market at the moment is trading at 73.28. I want to buy at $72 dollars. My stop loss is going to go in at 70. And if I buy one contract at 72 with a stop at 70, my loss is going to be $200. Let's say I'm happy to risk losing $400 on this trade. It meets my risk requirements. That's it. I'm ready to go. So this order is going to sit there. Let's place the order. So the order's placed, and you can see it now on the charts. There's my buy limit at 72. So slightly more than $1 below where the market is now. And I've got a stop loss if that order gets filled at 70. Let's see if it happens. We'll do an update when we look at oil in the future and see how that trade did. Let's go back to the charts. So I'm happy at the moment to take the view, well, perhaps we're going to see more of a recovery for oil. I think my interim target, we're still on the hourly charts here, would be for a run back up to perhaps 77 initially. If we flip this back to a daily chart, then I suppose ultimately, looking for a push back above 80 again, but then be wary of it selling off. So overall, we've got a pretty sideways market for oil. Lots of volatility. The thing swung from 64 up to 84. Just from the third week of March into the middle of April. So plenty of volatility, no real direction. And at the moment, I don't think it's going to change, but there are still opportunities in the short term, as we saw by looking at the shorter term trend there. That's it for this update. We'll see if the trade gets filled down at $72 a barrel with that stop a couple of dollars away from there, buying into that recovery over recent days. We'll see how that works out. As usual, go to the website, David Jones Trading, to sign up for the newsletter, find out about the trading course, and also that short video I've done on why I trade with the broker I trade with, as shown on that video. But for now, that's it for oil. So we'll leave things there. We'll come back, have a look at it in the various live streams and have a look at it again in the future. But until then, good luck with your trading.